Alrighty, good morning, good afternoon, good evening. Hello, planet Earth. Hello, traders. Let's see what we got going on today. As you can see up on the screen, we've got the Swiss. You can see it. We're looking at the dollar, and the dollar rolled over. Rates started to go down here in the States, and they sold the dollar, which is a fundamental concept. That's good. It's always nice to see a little fundamentals working. Um, so we start off seeing the dollar moving down against all the pairs trades. And maybe, we talked about it yesterday, the lack of confidence in the Federal Reserve and how they tricked the Exchequer in England to raise rates 2 months earlier, and then they didn't do it again last week, and no one got fooled by it that time. But you could see the dollar had been rallying very strongly, and going to the top end of the range, I was like, what is this? What is the how can the fundamentals be thrown out the window so easily anymore? And obviously, because the Federal Reserve does what it wants to do when it wants to do it, and that's where it sits. It doesn't go any. In other words, they have more money than any group of hedge funds and institutions. And so when they go and try to sell I don't know uh, you know $10 or $15 billion worth of assets, it takes nothing for the Federal Reserve to just step up and buy it and be the buyer of last resort, even when there's no reason for it to be the buyer of last resort. So, we see that go on, and you see here today, we were thinking, how do you raise rates on the planet and fight the inflation? Because that's what their job is to fight inflation. But for some, due to the fact, I guess he hasn't been sworn in yet, they haven't even voted on him yet, and so forth. Mr. Powell is just sitting there twiddling his thumbs, and basically 2 meetings have gone by now, and he hasn't raised rates. But and now you see rates actually coming down in the States, which is crazy in its own right. And you saw the dollar firm up because of it. Foreign money was coming in. The last couple of weeks, we were watching foreign money come in and buy the bonds. We were kind of surprised about that, thinking they'll let the interest rates rise a little bit and then buy bonds. But and I thought about it each time when I heard them, and I saw that the foreign money was coming in and buying bonds. I thought, well, it's one or two things. It's the Fed doing it behind the scenes and pretending that it's foreign money, or it's foreign money because they don't have any interest on bonds in many places. There's like 14, 15 trillion sitting around doing nothing in minus return. So, buying something in a stable currency marketplace, which it is, it trades inside its range. Institutions have the opportunity to buy bonds, collect interest, wait for the maturity, or take a profit on them every time the range in the currency flips into their favor. So it's a combination of all of it. Now this week, here we are at the first day of the month. Everybody's looking back and seeing how tough January was. At one point, it got as low as 2008 on being the biggest drop, in the marketplace itself. In other words, measuring the stock indices and so forth. And there's a lot of products that are stocks and bonds and so forth that have taken some major hits over time, especially the ETFs. In the tech sector and so forth, they've really taken a hard hit, and it's some of the biggest drops at one point going into the last 2 days that we've seen since 2008, 2009. As we take a sip of our tea after 5 minutes of talking. So, in the end result is that here we are. You see the Swiss. Moving down from the top end of the range again. I mean, it's like clockwork anymore. It doesn't stop. Over the last couple of years, they just play the range. The range just seems. I mean, it can slip out of it. You got inflation here, or you have actual supply demand issues, or whatever. But in the end result, they keep it in this range, and they don't like taking it out of that range. And so you can see here today on J4X, you see the red hinky bar itself breaking down. You see the white line breaking down, and the same thing over in the Chicago Quant, a red dot, and at the same time breaking below the zero line. Now we jumped into that weekly buy 2 weeks ago, and it did march up to the top end of the range, which was a surprise because we keep on thinking that the world is going to actually be like, I guess I have to stop right there and say, you think the global investors and the globalists, they're not necessarily the same, but sometimes they are commingled, are smart. But obviously they're not as smart as everybody thinks they are. They always seem to be like throwing darts with a blindfold on, and whatever sticks is what they run to. And so, we see here, talk of higher interest rates. You think that they started running towards the dollar, and they started selling the pairs trades. I thought that the pairs trades would be firmer because they would raise rates, and you would think that some of the money outside the United States would like to get an actual return on an investment. But it hasn't really turned out that way at all. It's been kind of the opposite of that. But you can see here, as you look on our charts, you can see that the dollar is backing off, and and again, we've talked about it. The cryptos, we're really disappointed that the cryptos couldn't break away from the general marketplace. And I saw a great stat too yesterday. When you try to compare the cryptos to a currency or some type of new form of asset, I saw where Bank of America, one of our biggest banks in the United States, did less transfer of equity than Bitcoin. Bitcoin actually outperformed Bank of America. That's like, wow, that's pretty impressive. So in some sense, the cryptos are doing their job. They're a tool to move assets. There's no doubt about that. But they don't trade in opposition to the general marketplace. We showed you that yesterday. They seem to have joined in. With all that selling, we've seen in the last 6 weeks, we've seen the Bitcoin lose 50% of its value. Ethereum has lost 50% of its value, so forth and so on. So, we're a little disappointed that, it would have been nicer to see, I guess if you commingle the idea of they like to call it a currency. I don't see it as a currency. I see it as an asset, an alternative asset. It's kind of like an asset that's not necessarily influenced by the central banks. We're seeing that obviously it is, because when the equities go down, it went down. And when the equities go up, it went up. So obviously it is being influenced on the centrals, the central banks and the Federal Reserve and so forth, and it's only a false hope at the moment. Maybe it will break out and get away from them over time. But right now, we don't see that part going on. We just see that the cryptos are a good way of moving assets cheaper and easier than doing it through some of the major institutions in the world. All right, let's go over to the euro. Euro's doing the same thing, showing good life. Right there. And as you can see right there, same thing. It bounced off of that 0.38 here on the Chicago Quant. And you can see here, the fast and slow stochastic reached its bottom end of a range, and the white line started to outperform the slow stochastic, or the fast moved faster than the slow, and started to turn up. And when it turned up, it's lifting this stuff here. And you can see we are kind of trapped still down in the weekly sell. We'll see how that plays out by the end of the week. Today is only, it's only Tuesday. We have a lot of economic news coming out. I think we have the unemployment numbers, and that unemployment number is kind of tied to the idea of raising rates or lowering rates. And if they see unemployment numbers high, there's more people working in the workforce, then they can say, oh my goodness, the economy is picking up, let's raise rates. That's the fundamental concept that we all used to know. Those fundamentals are not necessarily floating around much anymore, but we see them occur, and so we just kind of, I guess, what do they say is hope is eternal. We always hope that we'll go back to the great fundamentals. Another sip of tea after 5 minutes. There we go. So you can see the dollar is falling down in a lot of these pairs. Let's check out cable. Cable doing the same thing. Green dot, cleanly, two days it's ripped incredible distance with our gas line algorithm. This is to emphasize the. I guess we used to have Bollinger Bands on here, and so we did that to our manifolds. We made them two different colors, to show you that the advanced characteristic of the Bollinger Band compared to our manifold, which is much more accurate. Now let's put it up on J4X right there. And you can see, again, bottom of range, lifting up, green, hinky, ASCII bar, matching up real well with our work. And that's why we have the J4X up there with our work. It shows you this is a simple, free tool that you can use every day to have a general idea what's going on with more accuracy than any other public indicator floating around out there. And so, this is a simple way of having a good tool and on a day-to-day basis. And if you're going to go intraday, go non-linear in a sense. Go with like contracts or ticks. That's the only thing I recommend all the time, is that we show you that it's just a little bit ahead of everything else. Spatial math is much better bars-wise when you're making up. Instead of 1 minute or 10 minute or 13 or 3 minute or 2 hour, go instead with 396. Use a Tesla, or triple Tesla, like 1239 or 1239, things like that. Just use the Tesla numbers, just multiply them and expand them, and it gives you a better insight there. All right. From here, we go over to what we consider to be the great experiment, and that is the, let's see, where's it at? Right there, the Turkish Lira. We're seeing these free puts really stabilize the product, and we're going to be watching this for a while, because this might be, as I was saying, over the last couple of weeks now, I guess it is, that let's see, how do we do this? Get rid of that and move that down, so that's gone. And you can see the box is moving along. It's staying in its range. It's trapped in there. The product is going very quietly sideways, very stable, which is very important for a country to be able to, generate business, having a stable currency. And how they did that, after all those billions that they invested, they found a much more simpler way, and that is just give out free puts. And by giving out free puts, it has stabilized their currency. Now, there'll be a point where they'll have to, raise some taxes or do something to pay for those free puts. But what it does is it forces money to stay in their currency, which is pretty sharp. So, and it might be a template for some of the South American countries before they go bankrupt, to just give out free puts and keep that money there, because it doesn't seem to work any other way by declaring bankruptcy and having to start over again, over and over and over again. All right, from there we'll go and take a look at the euro against the Turkish lira. Right there. Let's move that over. There we are. And you can see there, same situation, trapped in a nice quiet range. See the manifold's tightening up enormously. It's gonna. When's the last time we've seen the manifold that tight? It got pretty close there, very close right there, at the beginning of December. Well, I guess they had a general idea that something was coming, so they let them take it up, and then they used 18 as a drop dead on the, which was about equal to this. I guess it was 21, something like that. We were thinking 21. We were thinking, actually, we were concerned it was going to go to 24. But our dollar side, we were looking for 18, and that's where it stalled out. There you go. There's a spot right there again. I don't think we're going to see a slide like this on the upside this time. I think it's going to be the opposite. It just has that look like they've come up with a good recipe and it's lasted a good distance. It's already done the whole month of January, and it started to stabilize after they made the announcement of the free puts. It stabilized right here. So we're thinking that it's going to stay like this for a while. I don't see any particular reason why we would need to see any real action in that currency when you have free puts. In other words, you can go ahead and buy Turkish Lira and get compensated if it drops lower than what you purchased it at. That's what a free put does. That's pretty cool. At the same time, that money sits in that country, and so then they can generate more business. Business makes the markets and the world go around. And you can see there's the Turkish Lira. It's played down to the bottom. That was kind of interesting. Let's see if we can widen that. You see it play down to the bottom of the range, lift it up, and it really didn't have any go to it at all. Look at that. It had no go. And now it's going down again, bottom end of the range. And you can see our work. Our weekly sells on a third week. It's not exactly screaming, hey, I want to go up. It's screaming, I think I'll go sideways down. All right, from there we go over to the truckers. Let's go see what Canada's doing. Canada's been a real fun thing the last couple of days with the truckers, and suppose it was a 96-mile long, or was it like 150-kilometer of trucks, protesting all the crazy policies that Trudeau and the country has been doing. Mr. Trudeau got pulled out of his house by his security. In the end, now he's claiming that he found out that he had COVID and he thought he'd go somewhere else. But I don't understand, if you have, you could live in your house, why do you have to go somewhere else? He ran because he was afraid of the truckers, and there were 50,000 people joining in with the truckers, and the U.S. media is not covering it much at all. And now the American truckers are talking about doing the same thing, driving to Washington and waking up the politicians, Mr. Biden's party, to stop doing what they've been doing. Could be very interesting. The world is getting tired of this COVID thing, and we're just not getting the 65 million deaths that the World Health Organization and all the other prognosticators said that we were going to get. We just didn't get that 65 million. They're claiming it's 5, and we're seeing stats that are bringing the 5 million down, which is kind of odd. But we're not seeing all those deaths. It was not the Spanish flu in the end result. And so people are just getting tired of it. And you take those vaccines and you still catch it again and so forth. It's, the gene therapy helps, but it's not going to stop it because it's the flu. How many times has someone said, if we come up with a cure for the common cold, you'll be a billionaire overnight? It's just the flu. And the end result, they're going to find out it was just the flu with a lot of wild press. All right, from there, we see the Canadian on our work and on Chicago Quant. J4X. Both are our works. Let's see, where's Canadian at? Right there. You see it's rolling over. And same thing here, we're on a second day of red dots. Let's see, where's Mr. Mouse? There it is. See that right there? We have 2 days of red dots. You see over on J4X, we have 1 day right now, and this will probably, well, it won't change that one at this point, but the pressure is on. And you see we are flirting with a weekly buy right there. But we're rolling over, and normally when that rolls over, we think, okay, well, maybe oil's up, that type of thing. That's usually the way Canadian moves. And a lot of this pop could have been just the truck situation. We mentioned it at the beginning of it, where they put a passport or some odd vaccine passport on truck drivers coming into the United States from Canada. And we have 3,000 miles of border. There's a lot of trucks going in and out of different places, and that really slowed things down. And Mr. Biden joined in and declared a vaccine passport for going into Canada. It was like, what? we have supply chain issues. Why are you doing these things? But in the end result is that you see the Canadian moving back down again with the dollar. Maybe by the end of this week, this will be gone and it'll stay in the sell. And maybe, I don't know, maybe oil will perk up more. Maybe metals will perk up. I did see gold this morning. Let's check and see. We're going to leave Canadian up on the J4X, and we're going to go shift to, where's that mouse at? There it is. We're going to shift to oil and gold and take a quick look and see what's going on there. And like I said, the last I saw, that's natural gas. That's kind of flirting with the daily sell. But here is crude oil right there, the front month, and you can see it is about flattish to down a little with a green dot. It still hasn't lifted through yet. You're seeing that. But at the same time, we're in a weekly buy now for a 6th week. So I guess, you know, there is strength in the oil sector. Obviously, it's winter. It's a good reason. That's not too much of a brilliant thing to figure out. And then the second one is, look at gold. Gold is trying to lift up here today. It's up about a little more than 3/4 of a percentage point. And last I looked, where was it at? I just saw it up about $12 or something like that, $16. So you know, it's let's see, it closed yesterday at where did it close at yesterday? Closed at 90. Yeah, it's at $15 now. It's up $15. And as you can see here, the dollar, or the daily itself is still down. And then when we look at oil, right there, as we did a few seconds ago, you know, it's firm, but it's also still showing some weakness in some ways. In this case here, it's in a weekly buy and a daily sell. And over in gold, we have it flirting in the reverse direction in a weekly buy and a daily, same thing, I'm sorry, weekly buy and daily sell, doing the same exact thing. It's the silver that's going a little rambunctious. It's playing with its daily buy, but it's still in a weekly sell there. All right, so from there, we go, been a quiet day. No one's asking questions. From there, we'll go over to the South African Rand. And see what they're doing with that. With gold showing strength, we would assume it would be going down. Let's put it up on J4X. Right there. Yeah, see, guiding down. And let's see what it looks like over on Chicago Quant. Yep, going down, breaking the daily. Red bar there. White line piercing the dashed line. Our white line piercing the 0 line. And the weekly, which tried to turn up at the end of last week and just missed by a very small amount, is rolling over again. We've kind of, I guess we had one client that shifted from, what was it, from gold to S&Ps and said, you know, I'm just disappointed that gold has not treated us well. It's like, yeah, I know, I hear you. We find it very odd in a inflationary period that the metals complex just can't even get up to their all-time highs, which is only like a couple $100 away. That is a real surprise to us. It makes me think of two things. One, gold knows that this inflation is going to dissipate much faster than it did in the 70s and the 80s. Ronald Reagan came in 1981, and inflation was, or interest rates were at all-time highs of 21%. Inflation was at its all-time high of 15.5%. And all it did is, once he got elected, it went down because they worked to knock it down. It took a decade to get it into single digits, but they did. They got it into the single digits by 92, 93, something like that. Or we got very close to the single digits. And, you know, we were like 12, 13%. You know, it had lost 50% of its explosion from 21.5. And so, you know, here, Mr. Trump, the last president of the United States, the former president, had basically proven that you can have a very solid economy if you run good policies. And we see most of this inflation from irresponsible policies from this administration. So there's going to be a big change going into in 8 months, 9 months. We're going to see a major change evolve, and from that, we're going to see change of policies, which will mean that all of a sudden our inflation may fall back down to 4 or 5% or 3% over a 2-year period. So maybe that's what we're really seeing, is that anticipation by money, knowing that they can wait it out for a year. And that's probably what is going on at the moment. And that's why we're not seeing gold run to all-time highs, or we're not seeing silver show any real life in it, and we're not seeing the bond market get that crazy about it. 10 years yielding 1.75. I mean, we did see it all of a sudden. It looked like last week. It looked like it was heading for the 2s, and the 30-year was like at 2.12, 2.14, 2.15, and now we see the 10-year trading at 1.75, moving down, interest rates dropping, and we're seeing the 30-year doing the same thing. It's down to like 2.06 or something like that. So let's just show you that real quick. So when we look at the South African rand, and there it is right there. You can see here, there was the low last week. Remember, when the price of the bond goes down, the interest rate is rising. So interest rates have been rising with the slide down. Now that it's met its bottom, and it seems to be trying to perk up. You can see we even went into a weekly buy last week, and we've been in a daily buy for 3 days now. And it's trying to lift up. And so interest rates may just stall out around here, and they might just say, okay, show us that it's going to be worse than the 70s and the 1970s and 1980s. And I don't think they can really, because I think that unless something changes in Washington in the sense of the policies are being put on hold, this is an election year, so that kind of stalls out that aggressiveness to do something, which means money is basically looking at it and saying, okay, we can wait 9-10 months. Why do we have to generate commissions? Pretty much what it comes down to. So I think we're really seeing in the end result, and I think you can really clearly, feel comfortable about it. The metals doesn't really trust that inflation is going to stick around. And I think that's what it really comes down to. And that's why you see the South African rand here trying to move down. Okay, back over to here. We'll go over to the ruble. And now we're talking about the globalists. I think they're the ones that are cheering on this Ukraine battle thing. I mean, in other words, they're losing on all fronts. I mean, they lost last week with Mr. Draghi. Mr. Draghi was not made president. And Mr. Draghi doesn't have a lot of fans outside the European Union, and he surely doesn't have a lot of fans in Italy. He was a darling for the European Union, and he really hurt a couple of major institutions when it comes to Italy itself. So then he retires from the European Central Bank and goes to Italy. He becomes prime minister and doesn't really have as much political clout as people think he does. So these globalists are slowly losing. Did I leave something there? I did leave something. Where's my phone at? Oh, I need to go. Oh, there it is right there. And the globalists are obviously on the ropes. So the next place for them to go is play with Ukraine and pretend that the world is going to go into a world collision. I guess that's the next thing. And poor Davos was a Zoom, and we all talked about that our former Federal Reserve Chair, Mrs. Yellen, who now is the Secretary of Treasury here in the government, started praising globalism, excuse me, and talking about how inflation is the new, what does she call it? The new supply side economic. I was like, what? So she's comparing cutting interest rates and cutting red tape and cutting interest rates and cutting taxes as equal to inflation and increasing taxes and increasing expenses and policies, and red tape. So she called that the new supply side. I have supply side to the government, whereas the Ronald Reagan and Mr. Trump policy of supply side is giving it to the people, with less taxation and less red tape and giving an opportunity to be free and grow. Mrs. Yellen is telling us the opposite right now. So these globalists are obviously losing their minds. And if we had more of a broader view of news, they would all be talking about how did supply side economics go in reverse all of a sudden. So I had this I was thinking about it. What is really going on? I saw Duragi's issues last week when he didn't become president, and I could see that the globalists are on the ropes. And even George Soros, who I never really agree with, is saying that it was a president for life of China, President Xi, is going to have a hard time staying president after the Olympics. I don't know. The globalists are on the ropes, and you know what happens when you have an animal cornered? They can get very violent, and so that's what they're really doing. So they're playing with Crimea and Ukraine, and they're teasing everybody and driving everybody crazy. And Mr. Putin is having a good time by getting Brent oil up over $90, and that's pretty much the whole recipe of it all. So it's just basically maybe the globalists out of all this thing are just making a lot of noise. Now you can see here the ruble would be a good example of that. It's trying to move back down. And maybe this week we get into a weekly sell right there. And you see it over here on J4X. Right there. Doing the same thing. It's got a bunch of red, like ours. All the red right here. And you can see it's heading down south and hasn't turned yet. Would be wonderful to see it move into the low 70s, or not low 70s, but to the mid 70s here, 75, 76. And I just don't have a lot of confidence that the globalists, I don't think they're that smart. I think really in the end result is they're almost like they throw darts hoping that something sticks in the board. As long as they hit the board and it sticks in the board, it's a win-win. Hey, 47. I checked that out yesterday because I was curious too, because what a good product that is. Let's go check out Gbp Jpy. I haven't updated the chart the whole bit. You see 4 full days in a buy, a 5th day is there. But look at that, it's flirting. Well, it was trying almost yesterday. It did not flirt with the weekly sell, but today it is. How about that? And we'll fix that. Yeah, yesterday it did not. And so you can see there, the weekly is trying to penetrate. And if this rolls over and this rolls over, if both of these two roll over, that'll be very interesting. Let's see how it looks on J4X. So Gbp Jpy, right there. Same thing with the greens right there. You see the white line is trying to roll over right there, but has not. So, yeah, that's interesting. I really think that now Japan, we've talked about this. Japan is close to 5-year highs. I think we looked at that before. Let's go over to that real quick on J4X. No, it's rolling over today. Let's see what it looks like on Chicago Quant. Right there, rolling over again. So this is right here was a 5-year high in the currency against the dollar. So that must have some great influence with Gbp Jpy. And so I would imagine, let's see, if we go back to Gbp Jpy, and let's compare it to the action in the dollar. So that's there. And let's put the little dollar index up there and see what that's looking like. Boy, that's been rocketing all over the place. There's some big gaps in that thing. Look at that. There was a gap up island, and it's closing the gap as we speak. Or is that no? That's yesterday. So we haven't seen an update yet in the market. They haven't started to update that yet. They should be. There should be a quote on that. And you can see it pushed itself into a daily sell yesterday. The weekly has not been able to come out. Let's see if we can tighten this up and see if it compares to what we see on J4X. And there is the Gbp Jpy. You would think there'd be some type of relationship with the two. And it does have that look, doesn't it? The low there in, what is that, December. You see the same thing here. So that's a low in November, I see. There's a low in November. Let's see how this looks. Yeah, so it has that same gig there. Now, was it coming down from a high at the time? No, that's interesting. So the GBP, the dollar is rising overall, and this has been rising for a bit, but then it rolled over, and we did roll over there. You can see that, but there's not really you would think there'd be some type of combination, you know, dollar and GBP JPY, and you know, I guess cable is really on. We showed you let's go back to cable real quick, and there's cable, and cable has been. I see, that's it. There you go. Let's put GBP JPY up on my Chicago Quant then. Let's do that. So it's really matching cable dollar pretty well. There it is right there. Okay, so yeah, now that makes more sense. So GBP cable versus GBP JPY have those same patterns, and you can see that now we're just barely starting to see a little bounce here, and we've been in a little bounce right there. So let me think. So GBP JPY, we got to keep on thinking that it's going to find a way to make another new all-time high. So I guess this may not survive this weekly sell, or if it does, next week maybe it'll get back into the buy and it'll take off and take out that high there on the GBP JPY. Maybe that's the way it's going to play itself out. We'll just follow the numbers and see how they go, you know. And obviously one thing is for sure, the currencies are not really reflecting the inflation. And so, you know, going back to that train of thought for just 5 seconds, and that is that maybe this inflation is not here to stay. Maybe in the end, wouldn't it be funny in the end that Mr. Powell is correct and it was transitory, just not transitory in 1 year. It might be transitory in a 3-year period or 2.5-year period. And maybe he has it right. He just has the timeline all wrong. He should have never apologized, and he should be saying this isn't transitory for the next 2 years. And it won't be like the 70s and the 1980s where it just was a rip your face off inflation. All right, from there, we go over to the Mexican peso. There it is right there. Activate. Let's put it right there. It's in there somewhere. There it is. Oh, no problem, 47. You know what? You did grasp what I was saying. There's a good chance this thing finds a way to bottom again. I'm just convinced that the dollar yen is going up. I think it wants to make. I don't. Maybe I'm wrong, but I mean, you know, obviously I can be wrong. Maybe they want to play the high end of the range for a while. You know, maybe that's what it comes down to. And so, you know, they want the dollar to be strong against the yen to get more dollars into Japan. You know, to get the business. Maybe that's what it really comes down to. But wouldn't that be funny that, you know, a year and a half from now, I don't know about funny, but wouldn't that be unique? In a year and a half from now, we find ourselves sitting with like 3.5% inflation, or or 3% inflation, or 4% inflation, and everybody goes, "Wow, 2 years ago we thought it was going to rip our faces off like it did in the 1970s and 80s, and it didn't." And Mr. Powell was right; it was transitory. And Mr. Powell didn't even realize he was right. I don't know. Somehow or another, his communication skills seem to have kind of fallen over the edge. We saw that last meeting, and I mean, he looked totally confused, baffled. What else can I say? Blustered. I mean, he really looked all over the place. All right, from there we go over to the metals complex. Let's see, which is the interest rate that we start talking about. You see it right here with gold. And you see it's trying to move up. I think we're getting a little green in there as we speak. And obviously, you can see our gold chart is moving up and we got a green dot. So green and a red, volatility. So there's not much of a reason really to be running towards the metals complex if inflation is not going to be that strong. Let's see what silver looks like this morning. Playing with the $23 area again. The high today is 23.04. I mean, lost $2.50 over a week and a half. And we're fighting to get into that buy. Maybe next week we get that in the weekly buy again. I don't know. There's I guess don't we have the Lunar New Year's and everything else starting to kick up this week, and that's usually a prelude to some strength in the metals complex. And then let's see, where do we go from there? There's copper. Copper's doing the same thing. A little buying coming in there too, looking pretty firm. You see, we were flirting with a weekly sell yesterday coming in, and it's disappeared altogether. Same thing with gold. Let's just go back to gold. Remember, we had a circle in there. I think it was yesterday. And not anymore. It's trying to lift up. And then we looked at platinum yesterday, and we were like, maybe platinum's trying to tell us the truth. And it does look like it, doesn't it? It's not playing with any weeklies at all. It's looking very strong. And it's 6 full days now, the daily buy. Over in the energies, we'll take a look at, there's spot oil. It was up, now it's down. And the daily is down and the weekly is up, as we said earlier when we were looking at Canadian. And let's see, where's that? Right there. Seeing the same thing. This is still holding on. Greens with all our reds right there. So there's a little divergence going on here, and you can see it's just starting to roll over right there. We've been in the sell since right there 3 days back. And today it's trying to do it on J4X. It's kind of lethargic, I guess, when it gets trapped inside of a range, a tight range like that, it does that. It gets a little lethargic looking. But our work is a little bit more, what's the word I'm looking for? It's sensitive. And so it's showing that there is some type of selling going on, but it's not going anywhere. Let's check out the back month in oil here, like in June oil. And we're going to go take a look at, there's June oil. June oil acting the same way. And it's been in a weekly buy a week even sooner. And then let's take a look at Brent and see what Brent's looking like. And there's Brent C. And Mr. Putin got his $90 oil. And that helps them out. It does. It makes life a lot easier for them when they have those petrodollars sliding into their country. You can see the weakness it's trying to develop here too. Now that started a day earlier, but it's still green and just heading into the red now. All right, what else can we say about any of these things? I guess that's about it there. Now let's look at nat gas. Nat gas is trying to back off a little bit this morning. Having a sip of water now. Let's see, there's natural gas. And there it is right there. See, it's got some pressure on it this morning. Not having much of a problem trying to go into the red, is it? And we just went into the weekly buy last week. And now it's already trying to roll over. Let's see how the year, we're paying $4, was it $4.69 basically, $4.70. Let's see how Europe is looking with it on the continent. There's still, it's quiet. Notice that it's at $28. We've seen it go as high as 10 times our value, but things are calming down here, or calming down there. Let's put it that way. We mentioned it yesterday. Germans are blocking the Nord Stream for 6 months and doing a policy study or something like that. Maybe in the end result is that these globalists are just pushing too hard to get resolutions so that they don't get caught. I think that's part of the problem. The globalist socialist combination, they push so hard and so fast because they know that when people get to see what their policies are, they're not really happy with them and they have no interest in them. We see it here in the States. Mr. Biden is polling in anywhere from the low, not the low, I guess you could say the mid-20s to the high or mid-30s in different subjects, which is really wild numbers. He's got to be the lowest. For a guy that supposedly got 80 million votes, he's got the worst polls ever seen. I mean, Jimmy Carter looks brilliant to him at this point. It's really weird. None of it's making a lot of sense. I can say this. He won't get those same votes next time if he runs because the states have changed their laws so that they can't produce votes 24 and 48 hours later. It all has to happen to the end of election and call it quits. No more adding 50 and 60 and 70,000 votes and 300,000 and 400,000 votes in different places 2 days later. Let's see, what else is there to be said about that? I guess that's about it. Natural gas is trying to roll over a little bit here. We'll see what they do. Maybe, I know we're going to see our temperatures rise to about, 12 Celsius. Last night we were something like 5 minus. So we're going to start to see some temperatures rise. That may put some pressure on the natural gas to back off a little bit. All right, I guess that's about it when it comes to the energies. Now from there, we can go check out the stock indices with the first day of the month. Put that up there like that, unless someone wants to see something. Let's look at the S&P 500 right there. There's the S&P 500 on an intraday, what's that, a 2 Tesla basically, 639, just a little under 2 Tesla. Well, Teslas are, to me, is it 396 is the official Tesla, 396. So when I have a 639, it's basically 1.68 of 2 Teslas. That's what that is. And so, we do the Fibonacci of the Tesla number itself of 396. We play around with it that way. And as you can see here, the stock indice is trying to move up in an intraday basis. Let me just show you what the daily looks like. Right there. There's the daily. It's in a daily buy from yesterday, trying to lift up a little bit more today. Let's put it over on J4X. Right there. Seeing all that strength for the last couple of days since Friday there. You see we got a volatility signal on Friday right there. And you can see we moved up yesterday. That number doesn't look right. I think we have to fix that. Let me go over and check what that is. What we'll do is we'll put you back up to the intraday tick, and I will fix that. because you can see that low doesn't make any sense. We know it didn't gap up like that. At least we don't think it did. Let's double check the exchange numbers and see. Let's see, where are you? There it is. Yeah, yesterday's opening range was something like the low was 43.95, and over here, where's that at? They're showing a low yesterday of 44.78, not 43.95. So it's a pretty big difference in numbers there. So let's fix that. We're going to do that, and then we'll see what it looks like even more. Maybe we can just give it a refresh. It'll straighten it out. Yeah, there we go. That did it. There you go. So you can see here, it's doing that thing it does. It's trying to lift, and it's trying to see it's plus by a little bit there. And you can see over here on the intraday itself, you can see it's up 2 points. It was down as low as 25 points, so they've been rallying it throughout since the London Open. Let's go back to the Frankfurt and the Swiss and London Opens, which was up in here, right there, and they sold it down in the European hours and brought it down to, where did we get down to? We got down to 82.50, and the low is, where's the low at? 78, so it's 4 points off. So Europeans pushed it down, and as the Americans started to come in, especially around 6 o'clock our time, or I guess it's 5 o'clock our time. This is, yeah, 5 o'clock our time. Americans usually start to come in and trade electronically. You can see it's started to pick up, and it's been climbing since. And now it's plus after being down 20 some odd points. Now it's up 4 points as we speak. Notice it's moving a little bit faster and faster. You know, whereas before we saw just up 2 points, no more than 2 minutes back or a minute back. And let's see if we can find, this is the chart we really enjoy. So let's put that away and go to this one. And you can see here the strength in it. Now this is a 3 Tesla, basically a 3.23 Tesla, the 1296. Much more long term, and you can see the strength that's been in there. It went into the buy. Where is it? Went into the buy here, and then a little correction, nothing major, and then back into the buy again. And it did it here too. And just as the Americans started to trade this thing, it came into a bottom. See the little action we've had there. Went into the sell there again, and then it started jumping into the buy here, and has never looked back. Basically making higher lows from that to that to that to that, and now this in this area here to this. So they are reaching for the stocks. You know, in many ways, and it's not hard to say, but it's hard to imagine, and that is that we're in 2022, and it would not surprise me if the markets after this next election start to really show a lot of good, strong buying, because we're going to see very favorable legislation. We're going to see very favorable policies that are going to move away from this globalist socialist thing that Mr. Biden's been doing for a year and change now. And it seems like his policies are stalled. As much as they're trying to do something, they've not been able to get past a few of their own senators. So the Republicans have been stopping it, and some of his own senators are stopping it. And the Socialist Party in the United States is going to shrink dramatically, or the Democrat Party is going to shrink dramatically, and the socialist side of it is going to be even more powerful. So what they're going to do is they're going to lose I guess you would call it the center of the Socialist Democrat Party, and they're going to get the extreme. So you're going to have a lot of policy changes because they're going to have a lot less power. At this point, all the polls show we're going to see a Republican Party that's The biggest since 1861. Imagine that, 1861. So what is that, 160 years? Is that 160 years? Yeah, it's like 161 years. We're going to have one of the biggest Republican parties in history in America. Maybe the biggest ever. And they're going to be veto-proof. They're going to be able to stop everything Mr. Biden has been doing, which is probably why we don't see 5% interest rates and we don't see gold trading at $2,500 an ounce. Instead, we're seeing it traded barely 1,800, because in the end, they're going to stop all the policies that are creating this inflation, and that's probably the the gist of it all. Does anybody want to see anything else? If not, we're going to start to head for the barn. Basically, we're going to start, getting ready for the market. If you want to see any particular product, put it up on the chat line here, and we'll go take a look at it real quick. But at this point in time, we're seeing the opposite. We're seeing metals, and we're seeing energies and interest rates not really reflect the inflation. So it's something to be thought about, and that is that it may be transitory in the end. But the thing is that not Mr. Powell's, what's the word I'm looking for? Not Mr. Powell's rate of change. In other words, his time frame. His time frame is wrong, but his concept may be right. Another sip of water so we can sing. Oh, what are your thoughts on the cryptos? I'm a big fan of the cryptos, and because I like blockchain technology. I'm disappointed that they have not been able to break out and change course to the general market. I'll give you a good example. There is Bitcoin, and this is the February contract, and it looks identical to the stock market, basically. So there's Bitcoin, and then you go over here and you look at the stock market, and it pretty much looks the same. It was not as sloping, but in the end, from December it went down. And for Bitcoin's been in a sell since like September or something like that. Look at that. Now, if we take a look at Dow Jones Industrial Average, same situation. It's been really, what is amazing? The one that it correlates the most with is the tech stocks, the Tech 100. Look at that. There's the Tech 100. Back in November, made its high. And Bitcoin made its high, I think it was at the end of September, going into October. Oh, November, okay, yeah. So it went into a weekly sell in the middle of November and made its high on the, that's the amazing part, is that it made its high like the $70,000 area plus was in the beginning of November. And when you look at the Tech 100, the high was November 19th, a week later. And that's the only disappointment I see out of it. Now, let me just show you Coinbase, the exchange that trades all these cryptos. No, I don't want to do that. Let's go to there, cancel. And let's put that there. Oh, I got to open something up. That's what it is. Close, cancel, open, workspace. Here it is. And right there. And let's just shift over to there so you can see this. And there's ARK, which is basically like the Tech 100. It's a ETF of all those high flyers. And notice the same thing. It goes into that sell at the beginning of November here. And you can see it gives a little bounce here. I think, what's that? That's towards the end of December. And let's just look at it does the same thing there. Where's it at? Yeah, so it gives that bounce at the end of December. The NASDAQ does, and let's show you Bitcoin. And Bitcoin tries at the end of December. Oh, no, it's November. There's December there. It does the same thing. It does that little bounce at the end of December and then rolls over again. So my disappointment is that it didn't break away from the stock market. I was saying something, 47, that was really impressive, and that is that I saw stats yesterday that showed that Bank of America, which is like our third or fourth largest bank in the United States, Bitcoin did more transfers than Bank of America. So it's starting to pick up, the trend. It's doing not the trend. It's picking up the job that it's supposed to do, and it's supposed to be an equity. To me, cryptos are a new form of equity that is less dependent on Federal Reserve and central banks. But we're not seeing it price-wise action break away. Now here is there's ARK, and that's basically like the Tech 100, matching Bitcoin pretty clearly, with that downwardly slope from November. There's that November slide, just like Bitcoin, identical to it. And then you see here in the coin exchange, the same situation again. We go back to November, and it's the same thing. It reaches 350, 360, was it $370 almost, 368.90, and this week it got down to 162. So it lost 50%, just the same way Bitcoin did. So the cryptos are not really breaking away, and that's my thought about it all, and it's kind of disappointing that it hasn't. So, all right, traders, we're out of here. This is Doc from North America. Catch you tomorrow on Happy Hump Day, and happy trails to you until we all meet again. Happy trails to you, to all our trading friends. Traders, catch you Wednesday. Ta-ta for now.